Good evening, colleagues and friends of the Armenian American Medical Society. Good evening, Mr. Gerard Kasabian from the Armenian Bar Association. I'd like to say a quick welcome to everybody as we're waiting for everybody to join this webinar. Just to introduce this event, this is the continuation of the Armenian American Medical Societies and Armenian Bar Associations continuing professional education series, CME in our case for the healthcare professionals. For many years, actually, the two sibling organizations have enjoyed a very fruitful and collaborative atmosphere, putting on events, professional events, educational events, and social events for our members to mutually educate each other, provide platforms for networking, and provide platforms where we can both be better equipped to better be citizens, better members of our community, and do best for our homelands in Armenia, Artsakh, and other areas in the world in the diaspora. I hope that you will find this session useful. We have found ourselves in this global pandemic where not only have we had to battle various health-related issues, but as a result of some of the activities of this pandemic, the government shutdowns, many of our practices in healthcare and law have had to modify their ways, and it's always incumbent on us and very beneficial for us to be armed with the latest information and latest knowledge so that we can best safeguard our practices, our places of business, our employees, of course, and our well-being. With that, we have organized the second session on the Paycheck Protection Plan, a government plan. We provided several sessions on this last year with practicing experts who are actually on the front lines in the trenches with, providing real life experience with these programs. And we have, in collaboration with the Armenian Bar Association, brought to you several experts on this matter who are dealing with this on a day-to-day basis. I'd also would like to introduce my dear friend and colleague, Mr. Gerard Kasabian, who is the immediate past president of the Armenian Bar Association, has been a board member for many years, and has truly been a champion and the friend of the Armenian community, being there, bringing many organizations together in order to ensure the mutual benefit of the members. Gerard, I'd like to turn the platform to you for your introductory comments.
Thank you, Dr. Sapilian. Thank you, Hasmik Keribarian in the background for coordinating with us. I wanted to also thank the Board of Governors of the Armenian American Medical Society, who always stand by our side. We really enjoy working with your group, like you said, as sister organizations. Today's presentation is very time sensitive. We had some scheduling issues to get this, but we insisted on getting it done ASAP. Whoever's watching today, the presenters will talk about the timing of this, but it's a very important program for those who have been affected by this COVID-19 epidemic or pandemic. And sometimes when you read these, the PPP, the Paycheck Protection Program rules, they at first seem pretty easy, but then it gets complicated. That is why today we've invited a banker and a CPA, and both of whom are not only good friends of mine, but formerly my bankers. I have no financial interest in this presentation whatsoever. They are both former bankers of mine. They both worked at another banking institution, and both of them are no longer there. So no disclosures beyond that. So Dr. Sapilian, maybe it's time to introduce the speakers, and we'll let them take it from there. If you'd introduce the first speaker, I'll take the second speaker.
Great, thank you, Mr. Kasabian. So our first speaker is Mardik Taslakian. Mardik is a Vice President and Associate Group Director with Signature Bank. He has been in banking for over 20 years and has been a successful investment advisor and relationship manager to business professionals, high net worth individuals, and closely held business owners. Currently, he focuses on unique banking needs of attorneys, insolvency professionals, and fiduciaries. Mardik graduated from Loyola Marymount University, LMU, my alma mater, with a degree in business administration, and he is also a fellow Usalertsi. Mr. Taslakian, I invite you now to please take over the platform. Feel free to share your slides and give us your perspective on what's the latest on the second part of the PPP. And yes, please take it away.
If you don't mind, let me introduce George Magarian as well, because they're going to be working on this together, and I don't want to interrupt them during the presentation. George, welcome. Mardik, welcome. George is with the black background with our coat of arms of Armenia, for those who aren't familiar with that. George Magarian has been an accountant and tax advisor since 1998. His firm, Magarian and Associates, primarily focuses on small businesses, real estate investors, nonprofits, professional sectors, and families with a broad array of financial needs. George graduated from Cal State University of Northridge with a dual bachelor's degrees in accounting and management information systems in 1995. He received his MBA shortly thereafter and completed his master's in finance at Furman University. While continuing his focus on accounting and tax disciplines, George also oversaw retail and commercial regions for Wells Fargo and Bank of the West over a 25-year concurrent banking career. This unique accounting, lending, and tax planning background truly shapes the holistic approach taken to meet the unique needs of every client. Welcome, Mardik. Welcome, George. And we will be watching and listening from the background. By the way, we welcome questions, and the questions will be appearing on different platforms, and wherever they appear, Dr. Sapilian or I will pose them to our presenters today, and then we can get some answers live. Thank you very much, everyone.
Thank you, Gino. Thank you, Viken, for the introduction. And I also just want to say thank you to the Armenian Bar Association and the Armenian American Medical Society for having us today. It's an honor to be here, and we're very much happy to help. Let's start with our presentation. I'm going to be sharing my screen, and let's get right into it. So we're talking today about the Paycheck Protection Program. I want to do a very quick overview for you guys. I want to leave a lot of time for questions, as I know there might be a lot of them. There's a lot of misinformation out there, and a lot of people are finding that there just aren't the resources available to get specific questions answered. So consider us a resource. If you have specific questions, we can take them one-off. Our contact information will also be shared with you guys. So if you have any questions or concerns, give us a call or send us an email. We'd be happy to help. Really, the point of this is to help others. That's kind of the call of arms in the banking industry at the moment. So we'd be happy to do so. So what is the Paycheck Protection Program? It started really with the CARES Act as a result of the COVID-19 pandemic. The CARES Act was passed in March 27 of 2020. They originally earmarked $349 billion for this program. In 2 weeks, the funds dried up. Congress acted quickly, and another $310 billion was put into the system. and that kind of stabilized the demand, and a lot of people were able to get the help that they needed. And we are affectionately calling it round one, or the first tranche of that program. Moving forward, in December 27 of 2020, so far $285 billion has been earmarked, and only a single tranche has been introduced. There isn't as high of a demand for the second round program as there is the first. I don't think necessarily because people don't need it, but the second round of the program had some unique qualifiers, which made some eligible and some not. So I think that was a barrier to entry that excluded a lot of people, for good or bad, I can't say. That's the reason why there hasn't been a high demand. Take a look at some of the numbers. They're really staggering. What blows my mind is since March of last year, since April, I want to say 9th, it was a Friday, April 9th or 10th of 2020, when the program opened, or the portal opened for applications, 6 million applications have been put through the system and approved. I think that's a staggering number. 5,460 banks across the country participated or have participated so far, for a total of $595 billion with a B dollars given out between the first and the second rounds of this program. In 2021, 1.6 million have been approved, and $125 million has already been given out. So that's roughly, I want to say 50-55% of the money has been passed out. The first program, there was a rush. It really was a rush, and a lot of people got caught off guard, and funds ran out, and a lot of people became very nervous. Luckily, Congress stepped in and did the right thing and increased those funds. There wasn't that same rush in this second go around. The second round of the PPP was really marred with a lot of technical issues with the SBA. The first round was very unique and different. I'll never forget it. I think it really is a watershed moment of my career, and I hope to never see it again. But in that second Wednesday of April, in 8 o'clock in the morning, the SBA issued to every bank in the country willing to participate an 800-page guidance document, and then told those banks that you have 2 days to start taking applications. So if any of you noticed, and I'm sure many of you did, the disorganized nature of some of the lenders, this is what we had to work with, guys. In 2 days, we had to read the 800 pages, understand the 800 pages, go back to the SBA with questions, and at the same time set up our online portals to be able to take those applications. We got past these documents, and I kind of told myself at the time, if I can read 800 pages and understand it in 2 or 3 days, I wouldn't have been a banker, I would have been an attorney. And now looking back a month later, if I can actually remember all 800 pages, then I should have been a doctor. So a lot of information for the banks and a lot of information for the bankers. That's why if you notice that there was a lot of disconnect or miscommunication in the first round of the applications, that's really the primary reason. We had 2 days to prepare. The second round was marred with technological difficulties and errors. When we started submitting applications the day after the Martin Luther King holiday, we started receiving error messages from the SBA indicating that the first round application was under review, and therefore we cannot make a decision for the second round. Turns out that error that they told us about seemed to be just a placeholder. They came back to us, the SBA, about a week later and gave us further details. So what was happening was their computer systems between round 1 and round 2 they weren't speaking to each other very well. So in round 1, if your lender took your company's tax ID number, the typical 95- and then the rest, and entered that as a social security number where it's 950-22-1234, something as simple and innocuous as that was a barrier for your second round application to go through. And that's one of the major errors that was in place, but there was a ton of other errors. And all of it was just really consolidating the information taken for the first round of the application and the information taken from the second round of the application. So I think a lot of the numbers and a lot of the demands that you see in the fact that only about 50 or 55% of the funds have been allocated so far has to do with the technical issues with the SBA. I submitted an application the morning of, we were ready to go for this particular client. We funded their loan on last Monday. So it took us over a month to be able to work our way through the SBA system. The SBA has been working overtime, even though it might not seem that way. We were in contact with agents of the SBA on Saturday, and we were getting emails from them on Sunday. So they really are doing a good job. You got to remember, it's 6 million loans in so many months, 1.6 million loans so far this year. It's just a ton of work for everybody. So they're really doing their best.
And Mardik, if I might add one thing to that, there's a brand new situation. Thank you again for having me on, both the Armenian Bar Association as well as the Armenian American Medical Society, for this opportunity for Mardik and I to join you. One other issue that's been coming up to add to Mardik's point, last few days actually, is something that they're calling an unresolved borrower. So if your bank is giving you that as the reasoning for the decline or a delay, what that simply means that either you've taken the necessary steps to forgive the first round or submit documentation, and some people did this, or it caused an issue of submitted documents that are there's something either wrong with them or they're under review. So that could also cause it. Sorry, Martin.
No problem, George. Thank you. Since we're talking about the problems with the second round applications, let's talk a moment about remedying these issues. And frankly, this is where a lot of business owners have been very frustrated with their lenders because it seems that there is no remedy in place. Ultimately, if one of these errors from the round one application has popped up, whether you're using the same lender as the first round for the second round, or whether you switch to a new bank, as many did because of their experiences or the poor service with the first round of applications, the original lender has to reach out to the SBA and correct these issues. There's a system known as ETRAN, E-T-R-A-N. This is the system that the banks are using to communicate with the SBA. If your application is stuck and there's an issue with it, you have to go back to the original lender and you have to tell them that they need to go into their ETRAN system and make the corrections so that you can then proceed with your second round application. It's really the only recourse and it's the only way to get this done. You have to remember, guys, the banks are getting paid on this. They're getting paid anywhere from 3 to 5 percentage points on the loan amount, depending on the size of the loan amount. The bank is being compensated for their work. Play hardball. Give them a hard time. Give them hell if you have to. Be firm, because a lot is at stake here. This is a lot of money, and you need to be able to get somebody over there to take some action. A lot of banks have offloaded this work to either they've hired third-party processors or they have their own back office people doing the work, and the relationship managers or the client-facing individuals don't have a lot of pull or power because they're not the ones doing the work themselves. If you find that that's the case, then you need to talk to your banker. You need to pull their ear, and you need to make sure that they're able and kind of willing to help you. So just a little bit of kind of advice from what we've been seeing out there on the field. So moving ahead with the presentation, some differences with the second draw or the second round. There's some additional eligibility requirements this go around that weren't in place the first time around. So the first and foremost is you have to have had a first draw PPP loan approved and funded in order to take a second draw loan out. And I'll get to that point here in a moment. The second eligibility is now you can't have more than 300 employees. The first round, that was 500 employees. Now they've lowered that amount so that they can be a little bit more inclusive and keep these funds more for smaller businesses as to larger corporations. And then finally, and I think this is the most important of the eligibility requirements, is you have to demonstrate at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. We'll go over that calculation right now in a little bit more detail. I know that might seem like a lot for some, so we'll go through it. I want to talk a moment very quickly about that first draw eligibility requirement. If you didn't apply for the first draw application, but now you find yourself in need, you read this requirement and you're immediately dejected because you think you missed the boat the first time and now you can't apply even though now's the time where you need it. The SBA thankfully has thought of this, and Congress has thankfully thought of this. And what they've done is they've reopened applications for the first draw as well. So if you guys remember, a lot of corporations took very large loans amount out. There was a lot of headline and bad press for some of these corporations. So a lot of people ended up paying back their first draw, or it was companies who found themselves thinking that they might need it, but luck was in their luck was on their side and they weren't affected as severely. So they had this money they didn't necessarily need it. They gave it back to the SBA. The SBA put all that money back into the pool. And during the second draw, they saw that there was a lot of money in that pool. So they reopened the first draw. So if you missed the boat the first time, you can still apply today for that first draw and still be eligible. You won't be able to reapply for the second draw now. It's a little bit difficult because some of the numbers and the dates as to when you're going to use the money, they don't match up because you guys only have until March 31st to submit applications. So because you can't spend the first draw money fast enough to make that deadline, banks aren't taking applications for the first and then immediately the second. But what I expect will happen is if there's a third draw, and we believe there might be, given a lot of the indication, given a lot of talk in Congress in terms of new stimulus that's in place or going to be in place shortly. I think there's going to be a third draw. So I suspect you'll be able to put in a second draw application during the third draw, just like you did now with the first and the second. Let's talk about the revenue reduction component. And I want to give you an example. And this is a real life example. Let's take a look at the very first line. If you did $10 million in sales in 2019, and then in 2020, you did $7.5 million in sale, that's a very clear-cut indication that you have a 25% reduction in revenue year over year, and therefore you are eligible for the second round of the PPP. Right? Simple math. There's nothing more to it than this. But let's take a look a little further. Let's say, and this a client of mine, it's a law firm here in the San Fernando Valley, about 36 employees and 7 partners, if I'm not mistaken. In 2019, they had $10 million in gross sales. In 2020, they had $11 million in gross sales. So, good for them. They have a 10% increase in sales year over year, even through this pandemic. Just based on these numbers, they don't qualify, right? They're still in need, even though they had relatively a good year over year. They still have a need for some assistance. That's where the second part of the calculation comes into place. Then you start to take a look at quarter by quarter. What was the story? In Q1, they didn't have any change, right? These are estimates, of course, but let's assume that there was no change whatsoever. In Q2, and this is the quarter where shutdowns really began in earnest, and this is where a lot of business owners really started to feel the squeeze because either their doors were not open at all, or people were home, and this is the very beginning of the pandemic. In Q2, this particular law firm went from $2.5 million in revenue in 2019 to now $1.25 million in 2020. That's a 50% reduction in revenue in a single quarter. We can stop right here as long as we can demonstrate that there's at least a 25% reduction in any one quarter, as long as the 2 quarters are the same. So I'm comparing Q2 2019 to Q2 2020. I'm not cherry picking. I'm not taking Q1 of 2019 and Q3 of 2020. That doesn't work. As long as you follow the same quarters year over year, and as long as you have a 25% reduction in at least one quarter, then you are eligible for the second round and you can continue with your application process. I'm not going to go over a tremendous amount of detail on this, and George can chime in with some additional tips, but what are the authorized uses? What can you use this money for? So far, I've heard people, they're putting in a new pool. I heard somebody who is day trading with the proceeds and got caught up in the Robinhood, GameStop, whatever you want to call that, and has made a good amount of money on that. Could they have done that? No, it's not the right use of those funds. When the SBA does find out, they're going to ask them to repay those funds. There's simply no way around it, guys. The SBA has been very clear as to how you can use this money so that you can then qualify for forgiveness. Really, the name of the game here is forgiveness. That's what's most important, because that's when this becomes actual stimulus as opposed to just another SBA loan. So the most important qualification for forgiveness, at least 60% of the loan proceeds have to go toward your payroll costs. This is the Paycheck Protection Program. And the point of the program is to provide businesses with 2.5 months of additional pay so that they can keep their employees paid, so that those employees can in turn pay their mortgages and their bills and continue to stimulate the economy. It's so that those businesses can stay open and in place. And really the point of this is Congress did not want mass layoffs and mass unemployment on their hands. So first and foremost, payroll is the most important cost. Between the first round and the second round, Congress made some changes and there were some clarifications around some of these other costs. So I'm just going to lump these up in general business operating expenses. They want you guys to pay your mortgage, pay your rent, pay your utilities, interest payments to your banks. They want to cover operating expenditures like internet, payroll services. They want you to buy PPE, for your employees, buy supplies for your business in order for you to stay open and active. So these costs are covered. During the forgiveness portion of the application, let me go back for a second. What we're talking mostly about today is applying for the first or the second round program. The forgiveness is a separate application that each lender is going to be taking themselves. A lot of lenders, because of the rule changes between the first and the second, stopped taking forgiveness applications for round one, right around December 27th when the new laws were put into place. We're hearing now, my bank, for instance, is going to be opening its forgiveness application portal on March 1st. So a lot of the banks took their forgiveness applications offline so that they can reflect some of the changes in the passing laws, and then they're planning on putting applications back online shortly. You don't have to apply for forgiveness for round one in order to apply for forgiveness for round two. There's no such qualification for it. So if you haven't submitted round one forgiveness as of right now, it's okay, it doesn't matter. You have 10 months until the day that your loan was funded in order to do a forgiveness application. After 10 months, that's when the SBA expects you to start repaying the loan. So we're not quite there yet. A lot of the forgiveness applications aren't online in the systems yet, so we don't have a lot of firsthand information in regards to them. What you want to do is work closely with your lender, keep your ears open and your eyes open, make sure you're reading the emails that they're sending you in great detail and really understanding those emails, because the banks are the ones who are taking the lead again with the forgiveness applications as well. George, anything you want to add in terms of some color or flavor from an accounting standpoint when it comes to the authorized uses?
Authorized uses, we've seen two sides of this, two extreme sides of the spectrum. Actually, we had clients that were extremely careful, overly careful, and they created a separate business account for it. They created a separate deposited the proceeds of the PPP loan and created a separate expense structure and paid those out from a separate account just to be in line with the rules. But there is nothing in the rules that says you need to keep things separate. The SBA in general has certain guidelines for uses of proceeds of any kind of a loan, and obviously it needs to be geared and used for business the business purposes. In this particular case, you have the overlay of the 60% that Mardik referred to for payroll expenses. In some cases on sole proprietorships and some partners and that don't have payroll expenses, it's a repayment of a personal income to basically to make up for income that was lost. So there's many different ways to look at it. The most important thing is if you have employees or you are an officer employee of your own company along with other employees, it is crucial that you meet the 60% rule, because there is a major law change, and I think Mardik referred to it, right after the introduction, where it used to be 75-25 and they changed to 60-40. The 60-40 change did not seem to be a big deal in the beginning. However, they added one more, there was one more caveat to the equation there. If you do not meet the 60% proceed rule, then the entire loan, not just portion of it, the entire loan becomes not forgivable. So it is important to make sure that you document things, not necessarily have separate accounts for it, but at least document things as you go along, as opposed to collecting documents when it's time to forgive, time to apply for forgiveness.
Thank you, George.
Excellent.
Let's talk a moment about the actual loan calculation itself. Technically, your lenders expect you to be able to do this calculation, and the bank's expectations are that the business owners are coming to us with the loan amount and the numbers. So just a quick talk about this. The formula is it's not too difficult. The most important thing is gross wages. And then you take your company's gross wages for the year, you add your insurance expense, your retirement contribution expense, and the amount of employment tax that you've paid throughout the year. You divide all that by 12, that gives you your average monthly payroll. And now the purpose of the PPP loan is to provide businesses with at least 2.5 months worth of payroll. So that's exactly what we're doing, is we're multiplying your average monthly payroll by 2.5%, and that's your loan amount. It's as simple as that. If your NAICS code starts with a 7.2, so if you're in the hospitality industry, if you are a restaurateur, if you own a hotel, if you're in that general hospitality, and on your tax returns, your company code that the IRS asks for is called an NAICS code. If that begins with 72, then you are eligible for 3.5 times your average monthly payroll. I know there's a lot of doctors and attorneys on the line, but I think it's also still worth noting, if you're consulting with anybody or if you're helping your clients for those attorneys, those in the hospitality industry are getting a little extra love, thank goodness, because they're getting hit very hard, especially with a lot of the restaurant closures. There's a difference between the second round and the first round in the loan calculator as it pertains to partnerships. And I want to go over this because I know a lot of law firms and a lot of medical practices are formed as LLPs or have partnerships. For those doctors and attorneys on the line that have K1 income for the year, in round one, you didn't use any of that K1 income. So if you took a big draw from your company, let's say $1 million, none of that income went toward your calculation. Only your employees were covered. That's changed in round two. In round two, your K1 distributions will go toward your total gross wages. The formula, it's based off of the K1. It's right there. But the rule of thumb, because typically doctors and attorneys are highly paid individuals, the rule of thumb is if you're not to exceed $100,000 per partner. So if you have 3 partners in your LLP, in your law firm, and each of you make $250,000 in K1 income in 2019 or 2020, the SBA will give you credit toward 100,000 of that only. So it's very important to note this. If you applied for your second round application and it's in process right now, and you just use your numbers from the first round, I suggest you go back, talk to your lenders, let them know exactly what your situation is. I have these K1s, I have additional income. We'd like to amend our application if it hasn't already been submitted. I highly suggest you do that because you're leaving money on the table if you don't. So important to note there. In terms of loan documentation, the rule of thumb is pick a year and stick with it. Simple as that. You can use all of your 2019 payroll numbers, even though we're discussing doing business in 2020. In terms of documentation, there's an easy way of doing this and a hard way of doing this. If you use one of the large third-party payroll processors like ADP, Paychecks, these large types of firms, they give their customers one of these. It's the SBA CARES, it's the 2020 CARES SBA monthly payroll cost calculator. The payroll companies know the calculations that the SBA is looking for, and they have everything right here for you guys. They have your gross pay, they do the $100,000 exclusion, they add the local taxes, they add the benefits, they even give you the average. So all you do is you take this average number, you multiply that by 2.5 and you get your answer. Most of the lenders will also take this one form in lieu of the federal tax form, the state tax form, the health insurance receipts, and the retirement contribution receipts. That's the hard way of doing it. You can piecemeal all of it. If you have ADP or Paychecks and you haven't used this, this calculator that they provide you, log into your account online, you should be able to navigate to the report section, and it should be pretty clearly highlighted because these are in very high demand. The other important thing to note regarding documentation, you have to prove to the SBA that you were in business on February 15, 2020. I don't know the significance of this date. I think they drew the line in the sand and picked a date for it, but they need to ensure that you were in business on February 15th. You can prove that either by, the easiest way in my opinion is your payroll records for that time frame for February. That proves very easily that not only was I in business, here's the, I was paying my employees. If you don't have payroll records for that time period, maybe you have a bookkeeper that does your payroll at the end of the year, a bank statement from that time showing deposits in February, showing deposits in March as well, showing deposits in January. Give it some a linear kind of proof that I was in business throughout this time. Banks want the loan calculation from you. It's a part of the documentation. What we used for our clientele is a simple Excel spreadsheet where you plug in all the numbers and it gives you your eligible loan amount right there. Or if it's a partnership, you have your earnings for the partners and then the wages for all the employees. And then again, it'll show your eligible loan amount. This is all we're really looking for. We're just looking for the math from you guys so that we can document the loan with the math and the basically the proof that this is the eligible loan amount. Finally, if your loan amount is greater than $150,000, the SBA requires proof of the 25% revenue reduction at the time of the application. This can be done with something as simple as unaudited profit and loss statements that you prepare yourself quarter to quarter or that your bookkeeper prepares quarter to quarter. It doesn't have to be audited. They don't have to be officially filed tax returns. At the end of the day, the business owner is attesting to the truth in the information that they're providing. So the SBA, I believe it's a good thing that they're doing this. They're giving people the benefit of the doubt. They're making the barrier to this process lower and a little bit easier. So you just need P&Ls, profit and loss statement, or your income statement for that time period. If your loan is less than 150,000, you don't need to require. Oh, sorry, we don't require any proof of the reduction. We just ask you for the numbers so that we know that there is a 25% reduction, but we don't ask you to provide paperwork. You will need to provide paperwork during the forgiveness application to show proof. So make sure that the numbers that you're using, if your loan amount is less than 150,000, make sure those numbers are accurate. You don't want to find yourself in a position where you used inaccurate numbers because your math was off or whatever the case might be. And then during the forgiveness application, you see that you did not have a 25% reduction. If that's the case, then guess what? You're going to be asked to repay that loan. It's not going to be forgiven. Finally, there's some important changes during the CARES Act that was passed in December regarding the employee retention tax credit. I'm not going to talk too much about it. I'm going to really let George handle it because it is his area of expertise. The one thing I can say, and I think you guys should pay close attention when he's speaking of it, the same law firm that I spoke of earlier, that although they had a year-over-year gain, they had 1 quarter loss. This same law firm, client of both George and mine, George was able to analyze some of their tax information. And in fact, because of the changes to the employee retention tax credit, this firm received $180,000 in tax credits because of some of the laws that were passed. So I like to joke, in 1 week's time, 2 Armenian guys got this law firm over $650,000 in free money. So it's important to note what George has to say on this, and I'm going to let you, George, take it away from here, and please continue.
Thank you, Marty. Just give me a quick second to share my screen. Okay. All right. Let's go back here. Before we get into this, I know it's not the most interesting topic. So I heard a story today of an attorney and a doctor fell in love with the same girl, and this relationship was in its infancy, and she was seeing both of them, and of course they each tried to knowing about each other, tried to outdo each other, and the doctor was bringing her a rose every day to show his affection, and the attorney was bringing an apple. And she was already confused enough to, she didn't know which one's the right guy for her. And at some point, she confronted the attorney saying, listen, I get the flower, I get the rose. It's a symbol of love. I just don't get the symbol of your apple. The attorney said, well, my intention was to give you an apple to make sure the doctor stays away. So an apple a day keeps the doctor away. So I hope that was funny. Moving on to the, we're going to jump around a little bit right now because I feel like it is, I want to put a disclaimer out there that we are not labor law attorneys, nor this is directly related to PPP. However, we thought the opportunity to present this as a reminder, because most people, either haven't kept up from day one, or haven't kept up with the changes as changes were presented, because it seems like it's happening every day. So the Families First Coronavirus Response Act, the FFCRA, which expired back in 2020, now it's extended through March of this year. It is important to understand that this has 2 different sections to it. The first part is the EPSLA, which is the Emergency Paid Leave Act, and the second part is the the good old FMLA, but this is the turbocharged version of it with double two E's added to it. It's the Emergency Family Medical Leave Act Expansion Act. So, and I'll tell you why it's important, and mainly because in today's conversation, it has to do with tax credits. And many people are just focusing on the PPP and the importance of the PPP, but they're sort of forgetting what else is out there. So please, consult with a labor law attorney or your HR for your paycheck for your payroll company for further details. But my intention is just to give you information on tax credit aspect. This applies to everybody, most employers that have less than 500 employees. Some healthcare providers may exempt, may exclude certain employees from this. However, most have not, from what we've been told. So it is important to know that it is a mandate, and it covers most employers in small employers. So going back to the first section, the emergency paid leave, EPSL. It has two different sections within it. It has the initial 10 days or the 80 hours that this covers, if it has to do with the employee themselves, if the employee is experiencing the symptoms themselves, if they are advised to by a medical provider to stay home, if there's a state mandate, whatever it might be, but it's affecting the employee directly, then you have a daily limit of $511 and a maximum of $5,110 over a 2-week period. Remember those two numbers, because those multiplied by number of employees that you maybe within your firms have experienced this and you have not taken advantage of it, you need to go back ASAP and amend those particular payroll tax returns to make sure that these show up as tax credit, not only just regular tax credits, but they're refundable tax credits, 100% of it. The second part of the EPSL has to do with if the employee is caring for a family member, or their child's school is closed, which obviously we know that's been going on. So if that is the case, you have, again, a 2/3 pay with a $200 maximum per day and a $2,000 over a 2-week period. So just remember those numbers as well. And neither of this affects the benefits of the employee. The second part of the act had to do with FMLA, but the only major change in this is the fact that they added the clause of children whose school is or daycare center has been closed, and if that is the case, there is the 2/3 pay over over a 2-week period if they're caring for somebody. All right. All right. The other difference with the second part of this is the fact that this is a 12-week coverage at 2/3 pay. And where it gets confusing is in most instances, you could combine the first week, because this does not cover the initial 2 weeks. You could combine the EPSL for the first 2 weeks and then go into the 12 weeks if needed of the continuation for the FMLA to get the maximum dollars possible. Again, tax credit wise, it's important to understand that it is necessary. Your payroll company will not call you and say, by the way, you have tax credits available here. Would you like to take it? If you remember in 2020, if you've had situations like this where they, obviously most of you have kept your employees and try to keep them happy. You've paid them. Some of you have paid them out of pocket, which is okay. There is a way to correct this and reclassify those particular hours and correct the appropriate quarter to go back and to ensure that those return to you as a refund. So this Neither of this has anything to do with income reduction or anything to do with the size of a company in terms of total income or what you face. As long as you've had the situation with the employees or their loved ones, then it does apply to you. Please take a moment to contact either a labor law attorney or your HR at your payroll company. The forms that this correction goes on as the 941, and the refunds are done on a 7200 form, which applies either a credit or a refund back to you if it's already been paid. All right. Going into a further law, again, this wasn't my intention. It's only to show you that there's ways to combine things. So based on the Cal OSHA exclusion pay mandate, which applies to everybody, this has been, this is retroactive back to November and it's set to expire October of 2021. With this one, it is, you're required to pay regardless of where the money is coming from, if it's coming out of your pocket at the end of the day, but it is important for you to make sure that the EPSLA is exhausted, their sick hours are exhausted, and it's best that, I wrote that it's best that to have a written policy in place just to make sure you're protecting yourself. And again, consult an attorney to make sure that it's done properly. Tax credits only apply in this exclusion portion if there is any EPSL hours that you applied. If it's an exclusion pay mandate and it's outside of this, then it does not turn into a tax credit. All right. Mardik was speaking about the ERC, the Employee Retention Credit. It was not a hot topic when this came out with the CARES Act, mainly because the minute that it excluded anybody that applied for a PPP or received a PPP, it was not interesting anymore because it made no sense. You know, if you took the PPP, which was the hot topic at the time, people jumped into, you know, applying at their banks, and the minute that you're approved, the ERC is out of the question. However, this changed a month ago when the CAA, the Consolidated Appropriations Act, passed in 2021. Now you are allowed to combine an ERC credit if you have a PPP. It's very important to understand this because, again, the ERC has nothing to do with the income portion of it, of the PPP, but it can be combined. But if the same dollars are used to obtain forgiveness, you're not allowed to combine both. It's one or the other. You are allowed to use both if it applies to you. It's just not for the forgiveness part of it. And again, this your payroll provider will help with this process for you. Just know that there's a lot of dollars that we're going to get into next. This is how and I try to put an example here to make it as easy as possible. For retroactively for tax year 2020, if you have not taken advantage of this and it does apply to you, an example was the law firm that Mardik and I were working on, and it turned into $185,000 of free money for them. And it's not, you know, it's obviously, and IRS was not going to come back to them and say, by the way, you missed an opportunity here, take this credit. It is up to you, and they deal with ADP and an ADP total source on top of it. So they pay a lot of fees for an HR and a paycheck provider that did not notify them, you know, by the way, you are eligible if you meet this and this. We had to do the work and provide those numbers to them, and for them to apply for the credit. There is a rule that you have to have a 1 quarter, and the quarter that you're starting the ERC has to be a minimum of 50% reduction. So in Mardik's example from a little while ago, if you remember that number, it was $2.5 million for quarter 2, down to $1.25 million same quarter in 2020. that met the requirement for them to apply for ERC for that particular quarter. The ERC calculation for that quarter in their scenario, and it's not going to apply to everybody, was basically maxed out at a maximum of $10,000 salary per quarter per employee, multiplied by 50%, which is 5,000 times the total employees. In their scenario, it turned out to be a good dollar amount. Now, to make things a little more complicated, it is in 2021, this actually changed. For 2021, and it is important to note here, and I put it on here, that this is actually going on to June of 2021. So meaning that you have not only 2020 retroactively to go back and correct your returns, but you could actually take advantage of this first quarter as well as second quarter if you're affected. The difference in this scenario for this year is a bit easier to qualify. And it is as long as you are less than 80% of your gross receipts for as compared to your 2019 for the same quarter, that's a qualification marker for you to use that quarter as a credit. Until you go above the 80% of your gross receipts, then you stop qualifying. Same example for 2020. Let's use that same law firm. So if you notice, quarter three, they stopped qualifying because their sales were above 2019 numbers. And that's okay, because they took advantage of it for one quarter. Some of you will have this credit apply for multiple quarters. It could be all three quarters of 2020 and the first quarters of 2021. So it could be quite a good dollar amount there. So 2021 numbers are a little different. So it's no longer 50% of the 10,000. Now it's 70% of 10,000, a maximum of, again, 7,000 per employee. But the main difference here is, not to complicate matters more, now we're looking at per quarter. You're not maxed out like the 2020 numbers where 5,000 was an aggregate of all quarters per employee. Now you could actually get up to 14,000 per employee. And it's again, it as long as you met the requirement and you're experiencing this is an actual refundable tax credit, and it's very time sensitive. If you miss, there's not a particular deadline, only because the law just became applicable. But most people they're not even looking at ERC because it's not, they thought they'd never qualify for it. So the example here that I'm using, again, is a $7,000 maximum, which in this case, if there would be their total refund per employee. Okay, this has been probably the most asked question that I've been getting, over the past few months. What happens if I take PPP? Do I have to report it? Is it taxable? Can I still show my expenses? And I'll tell you what logical accounting principle rule first, and then I'll go to what Congress did and IRS had to change their guidelines. The logic tells you that if somebody gave you money that's free, you're not allowed to show expenses that you use that money for as an expense, which is obvious to most. So that means you're double dipping. So IRS's initial guidelines saying if you qualify for PPP, you need to report this on your tax returns as taxable income, and then you need to either report it and show the expenses against it, or don't do either one. And then they came back and said, well, you know what? Congress didn't like the way it's presented, so they said, let's get rid of the fact that it becomes a taxable income. So they did that. And they said, on top of it, go ahead and write off the expenses. Write off the expenses just like you would any other year. So I will give you this caution in the bottom that I have here. Congress, once everything is settled, the dust settles, they're not going to come to protect you. And SBA is not your friend either. They're not an audit agency. They're not going to look at your numbers on an ongoing basis, but IRS is. So one of the, and again, don't take this as a tax advice, but consult again with your CPA. But what we have been advised and what we are doing going forward to make things simple is we are reporting the income, the PPP, if it's forgiven or if it's assumed to be forgiven on the tax returns as a non-taxable income, just to show that we are aware that we're reporting. And on top of it, we're reporting our regular expenses just like we have done every other year. So that way, if an audit arises at some point in the future, you have nothing to hide. You're showing that you got a PPP, you're showing the PPP dollar amount as a income, but it's not a taxable income on your tax returns. And then you're showing your expenses as you normally do. The other change that you might take advantage of it, or your CPA might tell you let's not, or let's do this year, is technically a PPP is a loan. A PPP becomes a loan the minute that's given to you, and then it becomes forgivable or forgiven when it's forgiven. So any kind of a forgiven loan, normally it's considered taxable income. But in this case, because it is not going to be taxable, you can't treat the PPP as a loan and put on your balance sheet as a loan payable until it's forgiven. Most of you have not had loans forgiven yet, and it's going to happen in 2021 most likely. And if that is the case, you show it on your 2021 tax returns as a forgiven loan, and you show it as a regular a balance sheet item on your 2020 tax returns. To make things a little more complicated, California, in this case, we're using this state as an example, never has a non-conforming tax law, meaning they don't conform with IRS changes as they happen. So that being said, California did not allow your expenses to be expensed if you took on a PPP. However, California now, the Newsom just announced 2 days ago that it is acceptable up to $150,000 of these expenses to show up on your California corporate returns or LLC returns as an expense, but not more than that. So if you have a PPP loan that's, let's say you took out for $250,000, you've done your job, and you've used to pay payroll, you pay your rent. Just remember that California returns will not mimic federal returns, only because you're maxed out at $150,000 deduction allowance. Everything else becomes non-deductible. Thus, your California net income, in most cases, should be higher than your IRS reported income. This is very important to know because California, again, is not stupid, and they're looking for opportunities to audit documents as they're filed. So if you know that you are in this category, make sure that before you sign that tax return, you see the difference on your California versus IRS returns. Okay. Staying on SBA, I wanted to bring additional information. Now, in some cases, I get calls saying, or Marty gets calls saying, listen, I'm doing really well. My 2020 was great. 2021 is even better. That's fantastic. You also are qualified for other, based on the SBA guidelines that was just released a few days ago. Under the 7A program, which the PPP is part of, and the 504 program, they've added a new category which allows any commercial real estate or practice acquisition loans, in your case, for attorneys and doctors, qualifies for a 3-month payment waiver. Not just a waiver, the SBA will be making those payments for you, meaning that it's going to apply towards your principal balance. So in this example that I'm using, a purchase price, and this is a real client, a purchase price of a $2 million for owner-occupied a commercial real estate, $200,000, 10% down payment, $1.8 million loan amount. The SBA waiver of the bank fees or the SBA fees was $46,000. That it became a free loan. Nothing was paid to the SBA to obtain this financing. Again, 3.6%, and this is an actual example. That's why I want to use it. 25-year fixed loan. The payments were $9,108 exactly. In this client situation, and he's been doing very well. His 2020 was nearly 30% more than his 2019, and 2021, his first couple of months had been great. And he qualified for all this, so he got a $3,000 or 3 times $9,000 credit towards the loan that was funded. So this is $27,000 on top of the $46,000 loan fee that otherwise he would have, any other time he would have to pay. On a small loan like this, it added up to nearly $74,000. So please don't limit. And the reason why I wanted to throw all this tax situations at you, along with other SBA guidances, and on top of it, the ERC, and it wasn't meant to confuse you. It's just that don't stop at PPP. Just explore your options and see what else you could qualify for, but do it fast because time is of the essence. Mardik, do you want to add something?
No, I think it just really goes to show, George, that this year, even more so than usual, having a good accountant is going to be, is going to be a very, very good thing. And there's so much information out there that you really have to kind of pick good advisors so that you don't leave this kind of money on the table. This is all stimulus money that Congress has passed and others are benefiting. And I believe we all should benefit from as much as we can if we are in need. So definitely, if you're planning on just handing, a bunch of papers to your CPA and let him do his normal thing, this is the year to say, no, let's stop, let's sit down, let's have a conversation. They're already getting a little busy for tax time, so make sure that you guys reach out to them and have these kinds of good, in-depth conversations about all these plans that are in place.
We'll open it up for questions. Gerard.
Thank you very much to both of you. I'm not privy to the questions right now, tell you the truth. Let me see. Dr. Sapilian, have you been getting questions on?
There were some questions that have already been answered, but Mardik, I think you got to those questions. Is that correct?
Yeah, sorry guys, I jumped the gun. I thought in addition to some of the questions that were being typed out, we would field some questions after the fact. The ones that were typed, I did try to get to them. One of them did ask if these slides are going to be sent to the attendees. I don't believe so, but I'm not certain. To the moderators, are these slides available, or is this going to just be put on YouTube in its entirety?
It really is up to you. If you have no objection to sharing your slides, there's no reason why we can't. And just to point out that, I would caution everyone that, as you've heard several times, that this content has changed and is continually evolving. So I would caution against sending out the slides that has information that is true as of today that may not be true as of 2-3 weeks from now. So and I also would say that this was very, very useful, very helpful information. I know I can say that from a physician who's in private practice. But in addition to that, I have seen several versions of this and evolution of this process, and I'm mindful of the fact that what's true today may not be true tomorrow.
Yeah, thank you, Doctor. A good example of that, in fact, is when we prepared these slides. We didn't talk about today what President Biden just yesterday, if I'm not mistaken, or the day before, came out and made a new rule that said starting today, in fact, this morning, any business who has over 20 employees cannot apply for any round 2 funds for the next 2-week period. I think it's a problem. It's a solution to a problem that did not exist. I don't believe that large companies are the roadblock this go around. It might have been true the first go around, and there was some bad press around, very large corporations or just large companies in general taking the lion's share of the funds. You have to remember this second round, there's a $2 million cap. The first round, there was a $10 million cap. So a company with 499 employees received a $10 million loan, thereby taking some of that money away from a whole bunch of small businesses. This go around, the real roadblock is the technical issues with the SBA. That's the reason why only 50% of the money is gone. It's the SBA's technical problems that have really not allowed businesses to fully to fully take advantage. So I don't believe it was a very large issue. Of course, in earnest, I think they're still doing right by, the little guy. And it's still a good thing. Every bank is handling it a little differently. On Monday, we were told that we are going to be declining anything with over 20 employees, just outright and not taking them. Today, we received information that we are in fact going to continue to take these applications and submit them with the caveat that, or with the hope that, not that we're hoping that there's a problem, but if we do come across a problem, then we'll have 2 weeks to work on that problem so that when this artificial 2-week period is lifted, then we didn't just burn 2 weeks of a client's time. We use that time wisely to work on any of the problems with that application. Every lender is acting in a way that best serves their business and their clients. So I don't know how your particular bank might be doing it, but for anybody who is on this call who has over 20 employees, who has not applied for second round, you're going to run into some problems over the next 2 weeks. I think the biggest issue with this is what happens in the next 2 weeks if all the funds are depleted somehow, and what happens to those businesses with over 20 employees who, because of this rule mandated by the president, now do not get access to additional PPP funds. Maybe it's just the thing Congress needs to get a second tranche, or just the thing Congress needs to be able to push for that round 3. Who knows? There might be some politics at play, likely are, but things are changing very, very rapidly. So we didn't even have time to update our presentation to account for some of this information. So you are right, Doctor. This stuff is changing all the time. I would rather not send these slides out because they are changing, but both George and I would be happy to do, and it's the reason why our contact information is still up on the screen. If anybody has any questions, I know we fielded some of the questions that were typed out that are specific to your business and specific to your particular situation. Reach out to either one of us and we'd be happy to have a conversation with you and guide you in the right direction. That's not a problem at all.
Great. Thank you, Mardik. Let me throw out a question out there, and the news may have come and gone. There was talk at one point that there would be automatic forgiveness for a loan amount below a certain threshold. And I'm not sure what happened to that. There was some consensus and bipartisan support for that. Can you comment on that, George, maybe, on
Sure.
the whole idea of automatic forgiveness?
Yeah. So when that news broke, unfortunately, many of the smaller loans that are under 50,000, they had already started submitting forgiveness packages, and it was very difficult for small businesses that some actually run their own payroll in-house, that it's not as sophisticated as getting an ADP report, for instance. It allowed them to follow the bank's guidelines more so of SBA's set guidelines. So the bank asked for anything imaginable. The 3805 form and the 3805 EZ form were the two forms that were originally available to apply for forgiveness. However, from what we've been told, and don't quote me on this, but the reason why banks all of a sudden turned off the forgiveness portal is because very soon we will have an opportunity to get a simple certification method where the bank will send you a certification questionnaire that you just simply click yes, yes, and I use this for business purposes. I use it to pay employees, and if it's under a certain threshold, which I think is $50,000, then it will automatically submit that certification to SBA after it's reviewed by the bank, and through the e-trans system, it will automatically issue the forgiveness number to the bank, which in turn receives the funds from SBA, thus canceling your loan.
And when should we, I know you said you don't know, when should we expect this decision to be final?
Mardik, I don't know if you've heard anything, but I think I believe they will wait till end of March, only because they don't want to throw in the forgiveness process in the middle of all this when people are applying for a second round. So my best guesstimate would be early April.
Great.
Good guesstimate. The SBA is very, very, very busy and has their hands full, and I don't believe has the capacity to. They've got to get through these loans first before they can even start with the forgiveness portion of it. So I would say definitely after March 31st.
Great. And just want to let everybody know that if you do have questions, please type them into the Q&A section, and to our panelists, and myself and Gerard will read them out loud and get you the answers. I know some people are trying to place questions, and let's see. And it looks like, Mardik, you got to many of them.
Yes,
Yeah, go ahead, Mardik. Sorry.
I like the question regarding from Audit, and I think it would be worthwhile mentioning it for those who might not be reading the question. But Audit said that they received their forgiveness already in February. So it looks like their lender did not take down the application, the forgiveness application, and their lender was processing. To kind of speak to that, if you have received, there are banks that have done it. And if you have received forgiveness and it's been forgiveness in full, from a banker's perspective, and again, I definitely recommend that you talk to your CPA to get further guidance on this. But from a banker's perspective and just a logical perspective, if you received full forgiveness already, then I would leave it as it is, because the new rules were only to benefit you further. So you're not going to get more benefit than full forgiveness. However, if you received partial forgiveness, then I believe it would be worthwhile for you to reach out to your lender or talk to your CPA. Take a look at the reason why you only received partial forgiveness based on the old rules, and see if that can be amended because of the new rules. I believe that would be worth your time and effort, because it's forgiveness. It's free money for your business so that you can operate. So don't ever give up a chance to capitalize on that. To the second part of Audek's question was his CPA told him that because he's already received forgiveness for round one, he's not eligible for round two. And George, correct me if I'm wrong, but as far as I know, I have not seen any indication from the SBA that is a event that will disqualify you from the second round application.
That is correct. You are definitely eligible.
I'm not saying your CPA is wrong. I'm going to go back and take a look at the SBA documentation one more time just to confirm. And Audek, if you'd like to reach out to me and provide your contact information, I can let you know for certain. But I'm about 95% sure that you do qualify for round two, based solely on the fact that you've already received forgiveness for round one. It doesn't disqualify you. There's still all the other qualifications. And as of today, there's that additional qualification of you have to have less than 20 employees. So if you have over 20 employees, you're gonna have to wait. But if you have under, then you can submit that second round. Frankly, if you're getting mixed signals or mixed messages, the best thing to do is apply for the second round. The worst case scenario is your lender is gonna come back to you and say, you've received forgiveness and therefore you don't qualify. But chances are the lender is going to come back to you and with a approval, or they're going to continue on with that application like it's normal. At no time in the application process do I ask a client to provide me with any information regarding their forgiveness application or whether it's been approved. The only thing we ask of clients in regards to round one is did you participate in round one? What's your round one loan number? That's it.
I have a question, if you don't mind. Some companies now are affected, but maybe not affected with that 25%, enough to be eligible for the PPP. Any other things that come to mind for both of you that would be helpful for our viewers in terms of programs that they should look into? One that comes to mind, just to fuel that, is if someone was sick and had to stay home and care for their children, for example, there's some type of a credit for that, apparently, that the payroll company or the accountant would file. Something to this effect, because some people watching this are like, damn, business was good for me, or it didn't drop that much. So what can we do to help our viewers look for some of the other things other than this round two PPP if it doesn't apply to them?
Sure. Very quickly, from the banker's perspective, and George has got more to say on this, it's definitely within his wheelhouse. But from a banker's perspective, that example I gave you guys of my clients who had a better 2020 than 2019, when we were doing their calculations, the controller and I, the financial documents that they were providing me, the P&Ls that were providing me, they were pulling the accrual method of accounting to pull those P&Ls. Using the accrual method of accounting, they did not qualify for that 25% even in Q2. Only once we caught it and said, wait a minute, your tax returns are based on cash, you need to provide us with your cash accounting method for your profit and loss statement. Once they ran that report, they did qualify. So really small, like a tiny detail. It's one click on QuickBooks was the difference between getting $450,000 or not getting $450,000.
Wow. Okay.
So make sure on page one, right under the name of your tax returns, it tells you if you're accrual, if you're cash. Most people are cash. A lot of attorneys and doctors are cash because there is nothing to accrue. Make sure that you're running your P&Ls the same as your tax returns.
Definitely.
George, some of the programs?
I think Gerard, you were talking about, your question was exactly, it comes up a lot. It is important not to discount EPSL, the emergency paid sick leave. In many instances, I mean, I have many clients that have had the same exact conversations with me over and over again, saying that, my employee got sick and I just, I'm not gonna get rid of them, or I want them to stay happy, and they have rent to pay, they have mortgage to pay, so I'm paying out of pocket. So you hear this a lot. I'm paying for employees that are not even in the office, and that's why the EPSL was introduced. And that's exactly, you have those 80 hours to reclassify to get up to $5,110 per employee for a 2-week period. So the odds are, in most of your instances, if it affected the employee themselves, it's not going to exceed those dollar amount, nor it's not going to exceed the 80-hour limit. So, and that's 10 employees, that's $50,000 right there. if it happened over this period. So, and it has nothing to do with income, absolutely nothing to do with income qualification. The second thing is, like Mardik mentioned, is ERC, the Employee Retention Credit. The fact that, it's only been literally 3 weeks that they said, oh, by the way, you, if you did not participate in this, I know we stopped you before because you took out a PPP. Go ahead and apply. We'll give it to you as well. So ERC is far more complicated to calculate things. However, in most cases, it's a large dollar amount, and it's not. There's no forgiveness issues. It's a straight tax, a refundable tax credit on your payroll report. So meaning that if you already paid it, they'll send you a check. So it's not a credit that you're accruing for the future. It's an actual refund that you'll receive from IRS. The only thing I could, I want to be very, very upfront because they're not looking to give away this money. IRS isn't. So it is the time sensitiveness of the 941 amended returns, unlike an income tax return, is far more crucial. So they don't give you the same leeway. They don't say, oh, by the way, you had a payroll error, 3 months ago, but it took you 2 years to figure it out. So because it's not an income related situation, it is very important to look at all your employees during a year and say, when did this happen? What was the situation? Calculate those dollar amounts and submit it. Worst case scenario is it's refused, but the odds are that's not going to be the case. So if it is classified correctly and you say, I am classifying these numbers, these hours as EPSL hours, it's a straight refundable tax credit. So don't discount that.
Thank you. Thank you for that. Ken, anything else?
I don't see any more questions. We have a question from Natalia here regarding the new deadline of March 10th for businesses less than 20 employees. Is it in addition to the second PPP draw, or is it the same, just giving priority to small businesses?
It's giving priority to small businesses. So it's not a new program. It's not additional monies put into the system. It is strictly the SBA saying, we're not going to look at anything with over 20 employees. For the next 2 weeks, we're only going to be approving files for less than 20 employees. So that's really all it comes down to. Not a new program. I don't believe there's even a name for it. No additional monies. It simply is a restriction on everybody else, but those with less than 20.
Great, thank you. Just to remind any of the healthcare participants that there are CME credits being offered. You'd have to visit the website and take the post-event questionnaires, 2 CME credits and 2 CDE credits. We also have a continuation of these co-sponsored sessions on March 9th, I believe is the date. Giro, do you?
I'm not sure. We'll have to check on that.
And that March 9th, yes. And it's about bankruptcy in this COVID era for small businesses and practices. So that's going to be on March 9th at 7 p.m. So please put that on your calendar. Mardik, George, thank you very much for being so generous with your time and sharing your expertise with this professional audience. I'm sure that the audience found it very helpful. We definitely will invite you again as there are new updates. If you would, agree to be back with us. We really thank you for your expertise. Gerard, I'm just going to ask you to do the closing comments.
This year has been difficult for a lot of people, and these presentations clear up a lot of the unknowns. At the minimum, it gives the people comfort that they know that they can at least contact one of our trusted friends for some information. And for that, I thank both of you for being here and being very well informed about this very complicated matter. Even though from just looking at it, it seems like, oh yeah, no problem, we can handle it. But I know it's very complicated, and I really appreciate both your time and effort and getting this together in a really short amount of time. With that, I'd like to again thank the Armenian American Medical Society for partnering up with us. And as I've always said, they're the ones who got us on Zoom and starting to do our presentations right when this pandemic started. And we're always grateful for that, especially to you, Viken, and Asmik in the background too, and the entire board of governors of your organization. From our board to your board, thank you.
Thank you. Thank you. And likewise. And George and Marty, please, I'm going to take a screenshot. So if you can, put your sort of best smile on, and here we go. 3, 2, 1, cheers. All right. Thank you again. And
Bye.
thank you everyone for participating. Have a great night. Please be safe out there. We'll be back in a couple of weeks.
Thank you.
Thank you.
Everybody.